Hello and thank you for taking out time to be with us today. I am Anup Maheshwari and I head the equity funds team at DSP BlackRock Investment Managers. I'm also the portfolio manager for the DSP BlackRock Opportunities Fund. Today I'd like to discuss the DSP BlackRock Opportunities Fund with you. But before that, I'd like to spend a few minutes talking to you a bit about DSP BlackRock Investment Managers. DSP BlackRock Investment Managers is a joint venture between DSP, the DSP Group, which owns 60%, and BlackRock of the US, which owns 40% in the venture. The DSP Group, as you may know, is a founding member of the Bombay Stock Exchange and have been involved in the financial services industry for close to 140 years. BlackRock of the US is the largest asset management company in the world today, with assets of about $3.5 trillion US, and they further advise assets which is close to about $10 trillion. The joint venture DSP BlackRock has been in India now since 1997, and in the past 14 years we have grown our assets. Today we stand at a point where we have roughly 30,000 crores of assets under management in our equity as well as fixed income funds. I'm also very happy to tell you that DSP BlackRock Investment Managers has been rated by Lipper as the best equity fund house 5 years in a row, and by CNBC CRISIL as the best equity fund house 2 years in a row. The DSP BlackRock Opportunities Fund is a diversified equity fund launched in May of 2000. The fund today has assets of close to 800 crores. From an investment style perspective, we follow a combination of both a top-down macro and a bottom-up micro approach. Our style is flexible in nature. We are not pure value or pure growth investors. We tend to look for opportunities which offer growth at a reasonable price. Today, the Opportunities Fund is invested roughly 70% in large cap names and about 30% in small and mid cap stocks. The fund has the flexibility to invest across market capitalization and also to take aggressive positions as and when it deems fit. At this point in time, the fund is more diversified in nature given market conditions today. But clearly over time we have the ability to change that positioning depending on our outlook for the markets. Some of the sectors that we are overweight or positive on at this point in time is the financial services sector. We do believe financial services is a very important sector from a stock market perspective, accounting for close to 25% of the index weightage. This is also a sector that we believe will grow very strongly in the next 4 or 5 years. Most companies or banks and financial services companies are likely to double their balance sheets in the next 4 to 5 years, and we do believe therefore that investors will do well by investing in this sector, which is why our funds are also exposed here. Another sector that we have been overweight on in the funds for quite a while has been the pharmaceutical sector. Pharmaceuticals is a fairly simple sector where the capital investment is fairly low, therefore companies are very profitable, their return on capital ratios are very high. These companies have also grown very consistently over a long period of time. If you look at an Indian pharmaceutical company today, part of their revenues, close to 70% of the revenues of Indian pharmaceutical companies come from exports, which is a very wide big market. 30% comes from the domestic market, which is also growing at a fairly healthy clip. So if you do a long-term analysis on sectors or stocks that have added maximum shareholder value over the last decade or 2 decades, you will notice that there are a fair number of pharmaceutical companies that tend to top the rankings. So banking and pharmaceuticals therefore are 2 very important sectors for us and are large weights in the DSP BlackRock Opportunities Fund. Before concluding this session, I'd like to share with you the performance numbers, which are obviously very important in your decision making to invest in a fund. As of end of January 2011, the DSP BlackRock Opportunities Fund had delivered a compounded annualized return of 22.1% since inception, which was May 2000. The Nifty index, which is its benchmark, had delivered in the same period a 14.36% return. For the 1-year period, the DSP BlackRock Opportunities Fund has delivered an 18.7% return versus the Nifty index, which has delivered a 12.7% return. So you will notice that both over shorter term as well as longer term periods since inception, the fund has outperformed the benchmark by a reasonable margin, and we do hope to continue and sustain such performance into the future. What is also important to note, and which is very important for us in delivering these returns, is the consistency with which those returns have been achieved. While absolute returns are important, we do believe what is equally important is how consistent those returns are, particularly in open-ended funds. And this is something that we feel very proud about across our equity funds, including the DSP BlackRock Opportunities Fund, in terms of the consistency of delivery of performance. So with that, I'd like to thank you very much for your time and for your view into the DSP BlackRock Opportunities Fund, and we do look forward to serving our investors in the future as well. Thank you very much.
Mutual fund investments are subject to market risks. Read the scheme information document and statement of additional information carefully before investing.